What is false claims insurance fraud? Have you ever wondered how some people try to cheat the system when it comes to car insurance? Let's talk about false claims insurance fraud, especially in the realm of auto insurance liability coverage. This type of fraud happens when someone intentionally provides incorrect or misleading information to an insurance company. The goal? To receive money or benefits they are not entitled to. In the context of auto insurance, false claims can take many forms. One common method is filing a claim for damages or injuries that never actually occurred. Imagine someone claiming their car was damaged in an accident when it was perfectly fine. Another way is inflating the cost of repairs or medical expenses. For example, if someone claims a repair cost of $2,000 when it only costs $500, that's fraud. Some people even report their vehicle as stolen when it is not, which is known as an owner give-up scheme. Others might stage accidents to create false claims. This could involve two parties agreeing to crash their cars intentionally to collect insurance money. Additionally, some individuals falsify the circumstances or timing of an accident to qualify for coverage. There are also cases where people submit claims for damage they intentionally caused to their own vehicle. All these actions deceive insurance companies into paying out claims that should not be paid or paying more than the actual loss. This ultimately leads to higher premiums for everyone who holds a policy. From the perspective of auto insurance liability coverage, false claims fraud undermines the system designed to protect honest drivers. Insurance companies depend on truthful reporting to assess risk accurately and provide fair coverage. When false claims are made, it disrupts this balance, resulting in increased costs and stricter underwriting practices. To combat false claims insurance fraud, insurers conduct thorough investigations. This includes verifying the details of accidents, inspecting damages, and sometimes involving law enforcement when fraud is suspected. It is essential for policyholders to report only accurate information and avoid any misrepresentation. This helps maintain trust and ensures the system works effectively for everyone. In summary, false claims insurance fraud in car insurance is the act of submitting untrue or exaggerated claims to receive benefits improperly. This not only harms insurers but also honest policyholders by increasing costs and complicating claims processing.